Conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at their present levels at least through the summer of 2019, and in any case for as long as necessary to ensure the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. Regarding non-standard monetary policy measures, we intend to continue reinvesting in full the principal payments from maturing securities purchased under the Asset Purchase Programme for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. The incoming information has continued to be weaker than expected on account of softer external demand and some country and sector-specific factors. The persistence of uncertainties, in particular relating to geopolitical factors, and the threat of protectionism is weighing on economic sentiment. At the same time, supportive financing conditions, favorable labor market dynamics, and rising wage growth continue to underpin the euro area expansion and gradually rising inflation pressures. This supports our confidence in the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. Significant monetary policy stimulus remains essential to support the further build-up of domestic price pressures and headline inflation developments over the medium term. This will be provided by our forward guidance on the key ECB interest rates, reinforced by the reinvestments of the sizable stock of acquired assets. In any event, the Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation continues to move towards the Governing Council's inflation aim in a sustained manner. Let me now explain our assessment in greater detail, starting with economic analysis. Euro area real GDP increased by 0.2% quarter-on-quarter in the third quarter of 2018, following growth of 0.4 in the previous 2 quarters. Incoming data have continued to be weaker than expected as a result of a slowdown in external demand, compounded by some country and sector-specific factors. While the impact of some of these factors is expected to fade, the near-term growth momentum is likely to be weaker than previously anticipated. Looking ahead, the euro area expansion will continue to be supported by favorable financing conditions. Further, the Union remains a priority. The Governing Council welcomes the ongoing work and urges further specific and decisive steps to complete the banking union and the capital markets union. And now we are at your disposal for questions.
Piotr Skolimowski, Bloomberg. My first question relates to your assessment of the risk of move to the downside. What sort of implication that will have for your policy, especially for your forward guidance? And my second question, you told us in December that at some point you will ask committees to start work on TLTROs. Have they already been put to work? Have they been tasked with looking into TLTROs? Thank you.
Thank you. Well, today we didn't discuss the implications. Today's meeting was essentially devoted to an assessment. Where are we? And why are we here? How long will the slowdown last? Is the slowdown going to worsen or stay as a shallow, lower path? These were the questions that were asked. And on the second question, several speakers actually raised this issue, but no decision was taken. So it was because we didn't discuss policies this time. We only were focused on the assessment. Quite clearly, the assessment will have implications about policy, but we didn't discuss them.
Mr. Kohani?
Thank you. Balázs Korányi from Reuters. 2 questions as usual, Mr. President. Given that data have disappointed on the downside fairly consistently since your last meeting, what gives you confidence that your economic assessment is actually correct and there's going to be a rebound? And my second question is quite similar, which is about core inflation. You predicted a vigorous rise in core inflation towards the end of last year. It didn't happen, and it's still not happening. Again, what gives you confidence that your assessment is correct?
It's basically one question, really. And you see, underlying inflation has been muted. It's been moving sideways. It's higher than the low levels that reached about a year ago. And it does, on what our confidence is based. It is based on the continuation of the economic expansion. It is based on the strong labor market performance, though it's slowing down. It's based on the encouraging pickup in wages. Nominal wage growth has gone up, especially, of course, in the core countries, and especially in Germany. Both compensation per employee and negotiated wages show a pickup, consistent, significant pickup. So the issue is, we see all these components moving in the right direction. And so the question is, why haven't they passed through? Why aren't they being passed through into higher prices? And what we are observing is that there is a profit squeeze. So it's a matter of time that, of course, this pass-through will happen first in the parts of the Eurozone where the labor market is stronger, unemployment is lower, especially in some countries where basically there is full employment. And then gradually will expand to other countries. That is what really gives us, and then of course the financing conditions and our monetary policy that remains fully accommodative strengthens our confidence in this process.
Ms. Weisbach?
Annette Weisbach, CNBC, to upgrade or update us on your forward guidance. Thank you very much.
Okay, since you're all asking, let me give you a summary of the meeting now. So, first of all, what you care most, were we unanimous? Okay, we were unanimous about acknowledging the weaker momentum and changing the balance of risk for growth. We're all in agreement on that. And we have to also to take into account some countries are more exposed, of course, to events in the Brexit case. So we follow that, but that just is a sign of a contribution to the increase in general uncertainty. And then, of course, we have the political developments in some countries in the Eurozone. This is one set of factors. There is another set of factors that is specific factors that are specific to certain countries. And this has to do with the slowdown in China and the waning effects of fiscal package in the United States. And the success is the persistence of the general uncertainty as being produced by these factors. And this certainly, if all this were to persist, we should expect a longer weak momentum beyond the near term. So, and then finally, there was also quite, I would say, unanimity about assessing the likelihood of a recession as being low. Now, again, I don't want to give numbers here, but some of them are very low. Others are on the average since the last 60 years or 50 years. So, in any event, pretty low. Of course, again, in an area like the Eurozone, these estimates ought to be taken with some caution, because if you have a recession, serious recession in one part of the Eurozone, that can
Wat? Het is niet verkrijgbaar. Nou, ik dacht van, ik kan me voorstellen dat je...
Enjoy, and then we create afterwards. Yeah, sure. Yeah, good.